Ladies and gentlemen, welcome. My name is Alex Orkin, and I'm a managing partner at 40 Capital. We specialize in very unique mathematical work that allows us to project the stock market and individual stocks in both price and time. I personally believe our work is very similar to what Jim Simmons was able to accomplish at Renaissance Technologies, if you're familiar with them. So we calculate the market in three-dimensional space, and we have a number of different time filters that we use in order to project exactly, once again, what the stock market and individual stocks will do going forward. I can talk about that for days. I've included a link that takes you to a description of our mathematical work, proof, exactly how we calculate the stock market in three-dimensional space, so on and so forth. So if you want to go down that rabbit hole, I do encourage you to click on that link and check it out. So today is a continuation of our series. We're going to be doing a lot of analysis going forward, probably on a daily basis. I'll try to record the video. And today we are looking at the Qs, Nasdaq and the Qs. So this is somewhat of a complicated chart. Let me unclick some of the things here and then go over the analysis one by one. Okay. Let me begin by saying that the primary exercise in the Qs and the Nasdaq and the world market, I guess, is whether or not we've seen the top right here. What you're seeing on the chart is a tool that we use, a very powerful tool in order to ascertain the time of when major tops or bottoms or minor ones, if we want to use shorter term cycles, will eventually arrive. So if you're familiar with Hurst cycles, this is very similar to that, but the primary difference is we use both up and down Hurst cycle composites. And the reason we do that is because the upper composites are responsible for major tops, as you can see here, and the bottom composites are responsible for major bottoms. And it gets a bit more complicated than that because there are multiple composites that are running in the stock market or individual stocks at any given time. So what you're seeing on your screen now is only one representation, and not necessarily a true representation, but only one representation of where the time cycles are. So if you look at this particular mid-cycle top, as we call it, it is scheduled to arrive on May 24th, 2025, which is what we had a couple of days ago. But this cycle is a relatively long cycle, so it has a relatively large margin of error associated with it. In this particular case, the margin of error is plus or minus 2 months, and it definitely crossed into the February top that we had on the Nasdaq and the Qs. In other words, it is possible that this cycle fired off right here in February. The problem that we had, and I'll talk about that in a second, is that the Nasdaq at that time, or the Qs in particular, didn't reach the target that we had specified for it at this juncture. It missed it by about $5. So from a timing perspective alone, you can say that, well, it did reach the top, but from a time price perspective, we are left within that gray area because the price did come within the margin of error associated with our work, but it didn't quite get there. And I'll talk about some of the chart. Well, I'll present another chart showing you that in a second. So this is one of the time variables that we use. Another one is we call cycle clusters. And essentially cycle clusters are powerful cycles that come together in order to deliver a hit on the market or individual stocks once again. And they can be long-term, short-term, doesn't really matter. In this particular situation, we're looking at the long-term cycles. And we have a cycle here that is arriving in middle of June and then subsequently in middle of July that lines up nearly perfectly with this composite cycle that arrives on May 21st. To add more, not necessarily confusion, but to add more analytical points to this particular picture, we can look at our three-dimensional calculations. Let me remove the time cycles or clusters for a second here. That identify the points where both time and price come together, and typically it entails a turning point at that juncture. So as you can see in this situation, we had two very good hits here in February, and I believe it was late November of 2024 for the Nasdaq. So essentially, what it's saying is that there's a very good probability that that February top was the top, but it ended up being in that gray area, as well as this S&P. By the way, we when I talking about the Nasdaq or the Qs, we had a very similar situation both on the S&P and the Dow Jones. It kind of left it some unfinished business, let's put it that way. And so we're not with 100% certainty sure that the top was put in place, but the probability is very high. Now, if the top on the Qs is not it, the top is not that far away. So the initial target that we had was $555 on the Nasdaq, plus or minus $5. We came very close to that at that juncture. But the main point, I guess, the main point I'm trying to relate here is that once this stop is put in place, the next move down on the Nasdaq and other indices will be into this particular low that is scheduled to arrive in early 2026. Now, this is very important. Take this into consideration as well. So we have something that we call fast movers, and fast movers are typically fast moves. They don't necessarily have to happen, but when we have a certain setups, as the case here, they often do happen. And that typically, when the time period between the major top or major bottom and subsequent bottom is very compressed, as is the case here, let's say, 6 to 9 months, the move that typically occurs within this period of time is a very powerful, sharp, sometimes violent move if we're talking about declines. So this is a very important factor to take into consideration here when it comes to the Nasdaq analysis, is that once this cycle is confirmed, assuming it hasn't fired off yet, the move down will be most likely a very powerful one. Doesn't always happen, but the probability of it happening is very, very close, or is very, very good. Let's put it that way. So let me kind of zoom in on the price variable for the Nasdaq and show you why we kind of ended up in this being in this gray area. So as you can see, the February top on the Qs came very close to this termination green region, as we call it. But if we zoom in right here, it came very close, but it didn't necessarily strike it. That's why we cannot say with 100% certainty that we did see a top on the Nasdaq. Now, if we did, then we should begin to sell off relatively soon here. We do have a Dow Jones forecast that is a little bit, not a little bit, but quite a bit more clear when it comes to overall indices. So if we begin to see a sell-offs on the indices, it will become clear whether or not the top was put in place here. But if not, then we'll, Nasdaq and the Qs in particular, will have to reach this region, once again, 555 plus or minus $5. And that's going to happen relatively soon before rolling over and beginning to accelerate lower into that low that I just described to you a little bit earlier. So all in all, the forecast for the Qs is the forecast in the trading setup for the Qs is somewhat clear, or I should say very clear. If the top was not put in place in February, we're going to put the top in very, very soon at the prices that are not going to be that much higher than February top. Once again, 555 plus or minus $5, assuming the top was not put in place in February. And once that happens, the index should roll over and begin to accelerate lower at quite significant place into this low that we should see in early 2026. That's going to be quite a significant decline. So that's pretty much covers it. By the way, we do have a trading a play for this particular move because we do anticipate a significant decline in this situation. We do have a service that outlines all of that, including our trading setups, execution, etc. There's a free trial associated with it, 30 days. We don't take credit card. We don't gather any information. So if you're interested in any of that, please click on the link in the description of this video. It'll take you there. You can request a free trial and we'll hook you up. So that's it pretty much for today. I think we'll be back tomorrow with another stock update and we'll just keep going. Thank you very much for your time. Have a wonderful day ahead. Bye-bye.